We are obviously all surprised by the Brexit vote. We're all surprised by the recent vote in the United States. But I think what it highlights is, in general, the financial system is probably more fragile than it's been since the last financial crisis. If we look around the world, what are some of the problem spots? Obviously, China has a significant amount of debt, significant amount of NPLs. We have Italy, which has high levels of debt, high levels of unfunded liabilities. We have German and Spanish economies, which are not growing much. We add up the totality of all this, and it is very, very concerning. And of course, overlaid on this is what the central banks have been doing. So what have they been doing? Starting about 5 years ago, we've seen these unorthodox monetary policies, starting with quantitative easing. Where we are today is negative interest rates. So over half of the world's sovereign borrowings are in negative interest rate territory. That includes Japan, it includes Germany. And what does that mean? None of the economic orthodoxy actually deals with negative interest rates. So we're really in uncharted territories. Now, what's the impact on the financial system of that? Well, for banks, their net interest margin is compressed, their revenue is compressed, they're under further pressure. For insurance companies and asset management companies, they have long-term liabilities, and they're essentially getting no return. They've got a return to date because as interest rates fell, asset values rose. But can that go on forever? How much lower can you push down interest rates? How much further can they go in negative territory? So I think the reaction to Brexit and the reaction of the financial markets to the U.S. election, the reason it's so volatile is because we really are in a very fragile state.